Earnings season is here, and some of the biggest short-term trading opportunities this week might be hiding in stocks trading under $5. We are talking about companies where a single earnings report can send the stock up 10%, 20%, sometimes even more in a single trading session. Today, I'm breaking down 5 U.S. stocks trading under $5 that all have earnings coming up in the next few days. These are the exact types of setups that active traders watch every earnings season. And make sure you watch until the end, because one of these companies is operating in a high-growth industry that could attract serious attention when those numbers drop. Welcome to Wild Stock Radar, where we track undervalued stocks, earnings movers, and market setups that traders are actually watching. If you're into low-priced stocks, earnings plays, and real market insights, hit subscribe and turn on notifications so you never miss our weekly watch lists. All right, let's get into it. Stock number 1 on today's watch list is Domo, ticker DOMO. Domo is a cloud-based business intelligence platform. Think of it as a centralized command center that lets executives and managers see their entire operation in real time, from sales performance and financials to customer behavior and supply chain data, all inside one live dashboard. It's the kind of tool that enterprise companies use when they need to make faster, data-driven decisions. Right now, Domo is trading around $4.31 per share, with a market cap of approximately $180 million. The stock has seen some early upward movement, and trading volume is sitting around 743,000 shares, which tells us traders are already paying attention. Going into earnings, the key numbers to watch are revenue growth and enterprise customer retention. If Domo can show that it's growing its subscription base and holding on to large accounts, that could be a short-term positive catalyst for the stock. On the flip side, smaller software companies can see sharp drops if they miss revenue expectations or lower their forward guidance, so this one goes both ways. Now, the next company is much smaller, but it's working on technology that sits right at the intersection of clean energy and electric vehicles, and that combination is drawing a lot of attention right now. Stock number 2 is Ideal Power, ticker IPWR. This company develops next-generation power conversion technology. Their systems are designed to improve efficiency in renewable energy storage, electric vehicle charging infrastructure, and grid-level power management. Their flagship innovation is called B-TRAN, a bidirectional semiconductor switch that the company believes can outperform traditional silicon components in power conversion applications. The stock is currently trading around $3.38 per share, with a market cap of approximately $40 million. Because of its smaller size, Ideal Power tends to have lower daily volume, which means any surprise in the earnings report can create outsized price movement. The big questions here are around commercialization. Has the company secured new licensing deals or partnerships? Are they closer to bringing B-TRAN technology to market? Any positive update on those fronts could act as a strong short-term catalyst. That said, early-stage deep tech companies carry higher risk. They're often pre-revenue or early revenue, which makes them more volatile around earnings. Now, the next company had one of the biggest price moves on today's entire watch list, and that surge in momentum is exactly why traders are starting to circle it heading into earnings. Stock number 3 is Motorsport Games, ticker MSGM. This company operates at the intersection of gaming and professional motorsports. They develop officially licensed racing titles, the kind tied to real-world racing organizations, and they also organize esports tournaments connected to those same motorsport brands. It's a niche play in the gaming world, but one with strong brand recognition in the motorsport community. Motorsport Games is trading around $4.36 per share, with a market cap of roughly $25 million. What's notable here is that the stock recently jumped more than 7% in a single session, with volume topping 500,000 shares. That kind of momentum ahead of earnings is something technical traders watch very closely. Key areas to watch at earnings include updates on new game releases, licensing agreements with motorsport organizations, and user engagement metrics from their esports events.
If the company shows growing traction in its gaming platform or esports business, that could push the stock higher. But small gaming companies are also subject to high development costs and deal-dependent revenue, so risks remain elevated. Stock number 4 is Myomo, ticker MYO. Myomo is a medical robotics company that manufactures wearable, motorized arm braces for people living with neuromuscular conditions like stroke, ALS, and brachial plexus injuries that limit or eliminate a person's ability to move their arm. What makes their technology unique is that it reads actual electrical signals from the patient's own muscles to power and guide the device. It's not just a passive brace, it responds to the user's own nerve impulses. Myomo is the lowest priced stock on today's watch list, trading around 84 cents per share. The market cap is approximately $32 million, and recent trading volume is around 490,000 shares. Small size, but real technology with real clinical applications. In the healthcare device space, traders typically focus on 3 things at earnings: revenue growth, insurance reimbursement approvals, and geographic expansion. If Myomo reports stronger device sales, progress on Medicare or Medicaid coverage, or partnerships with new hospital networks, any one of those could move the stock significantly. The downside risk? Reimbursement delays and slow adoption are common headwinds for early-stage medical device companies. And finally, the last company on today's list is operating in one of the fastest-growing entertainment sectors in the entire digital economy right now. Stock number 5 is High Roller Technologies, ticker ROLR. High Roller operates a regulated online casino platform offering games including blackjack, roulette, baccarat, poker, and slot machines, all accessible through its digital platform. The online gaming industry has been one of the fastest-growing entertainment sectors globally as more U.S. states and international markets move toward regulated digital gambling frameworks. The stock is currently trading around $4.28 per share, with a market cap close to $46 million. It's the largest company by market cap on today's list, and it sits in a sector with a clear growing demand curve. The main numbers to watch here are active user growth, gross gaming revenue, and market expansion updates. If High Roller reports strong platform engagement or announces entry into new regulated markets, that could attract significant buying interest. Risk factors include regulatory changes in key markets and increasing competition from larger, better-funded gaming operators. Before we wrap up, let's talk about something every trader should understand before stepping into an earnings play. Earnings announcements create volatility, and volatility cuts both ways. Stocks can move sharply because investors are reacting to several things at once. First, revenue. Did the company grow faster or slower than expected? Second, profitability. Are margins improving or contracting? Third, forward guidance. What does management say about the next quarter? And fourth, industry trends. Is the sector getting stronger or weaker? Here's something that surprises newer traders. A company can report genuinely strong earnings and the stock can still go down. Why? Because the good news was already priced in. Traders had already bought the stock in anticipation, and when there's no new upside surprise, they sell. This is why professional traders focus heavily on position sizing and defined risk management when trading around earnings. Never risk more than you are prepared to lose. All right, now I want to hear from you. Which of these 5 stocks are you watching this week? And do you personally like trading volatility or prefer to wait for the market to react first and then looking for an entry? Drop your answer in the comments. I read every single one. All right, to recap, here are the 5 stocks we covered today. Number 1, Domo, ticker DOMO, Business Intelligence and Analytics. Number 2, Ideal Power, ticker IPWR, Clean Energy Semiconductor Technology. Number 3, Motorsport Games, ticker MSGM, Racing Games and Esports. Number 4, Myomo, ticker MYO, Medical Wearable Robotics. And number 5, High Roller Technologies, ticker ROLR, Online Casino Platform. All 5 are trading under $5 and all have earnings coming up, which is why traders are putting them on their radar right now. If you got value from this video, please give it a like. It helps more people find this content. Subscribe to Wild Stock Radar for weekly watch lists, earnings setups, and market insights, and turn on the notification bell so you never miss a drop. Thanks for watching. I'll see you in the next one. Disclaimer: this video is for educational and informational purposes only and does not constitute financial advice or a recommendation to buy or sell any security. Always do your own research and consult a licensed financial professional before making any investment decisions.